In this video, I'm going to introduce you to the best scalping strategy. This strategy consists of two indicators that have high trading accuracy and will result in profit for you. With the tips I provide in this video, you will also be profitable like me. Let's not make the video too long, and I hope you find this strategy helpful. Now I will tell you how to trade. Now we just need to adjust the trade settings. Set the time frame to 5 minutes because this strategy works best in this time frame and it's unique that no one has ever shared with you. First of all, in the indicator tab, we search for relative Indian scalping. When you find it, click on it. Then go to its settings and change the values you see. Next, we need to add another indicator, so search for EMA, difference, histogram, and stochastic. When you find it, click on it. Go to settings and change the values you see, like me. Now your settings are ready, and I will explain to you how to use these settings and this strategy to be profitable. Buy setup. In this strategy, whenever the relative Indian indicator gives us a buy signal and the stochastic indicator shows green columns and the market forms a bullish candle, it's time to place our buy order. We should set our stop loss at the previous low of the market, and risk to reward ratio will be 1 to 1.5. The market completely hit the target. Let's look at a few examples of these trades together. I hope you have understood this strategy and like it because it is a great strategy that can make you a lot of profit. Sell setup. When the relative Indian indicator gives us a sell signal and the stochastic indicator has red columns and the market forms a bearish candle, we can place a sell order. Here we should set our stop loss at the previous high of the market, and risk to reward ratio will be 1 to 1.5. The market completely hit the target. Let's look at a few examples of these trades together. Finally, if you like this video, please like and subscribe. And if you have any question, be sure to ask me in the comments. Thank you for watching this video.